Welcome to the Bitcoin Bottom Line. I'm Steven McClurg with co-host C.J. Wilson, fact checker, producer, knowledge of everything, Mr. Josh. And we have a very special guest today. Nick, how you doing?
Good. How you guys doing? Thanks for having me on.
Awesome.
So Nick, you work for Luxor, and why don't you tell us a little bit about what Luxor does? I know Luxor as a pool, but you guys also have a lot of other services. So why don't we kind of just dive into that a little bit?
Yeah. So if you go Google Luxor Technology or Luxor Mining, the first thing that'll show up is our mining pool. We're one of the top 10 Bitcoin mining pools in the world and in the US. But we do all sorts of different stuff. So we have Hash Rate Index, which is a property that Luxor owns, basically trying to provide a ton of really good data about the mining ecosystem. So pioneering the hash price term and tracking the value of hash rate over time. Also have the ASIC Index, which is the value of ASIC machines over time as well. We scrape like 50 different data sources from all different places, from WeChat to Telegram to different forums, eBay, Amazon, Alibaba, all different places, and try to aggregate that up and do a nice metric that we can use to determine like what is the value of hash rate right now. And we just launched, or I shouldn't say we just launched, we're just about to launch energy markets. So we're basically tracking the value of energy over time. And we view that as being very much, very integral to the Bitcoin mining equation. Like Bitcoin mining is just an energy problem at the end of the day. We also do ASIC brokerage. So, if you trying to buy machines, we can get you machines. If you're trying to sell them, we can sell them for you. We have a nice universe of buyers and sellers just given the Luxor ecosystem. And then we have services down to things like white labeled mining pools. We'll build the private mining pools, starting to get into some firmware. And then, what we're well known for is hash rate based derivatives. So, we're in the process of kicking off a bunch of different financial products for miners to sell or for hedge their operation. And also offer the ability for speculators to take the other side, lever up, and take a long position on hash rate without having to go buy all these machines and do all the hard part. So we do all sorts of things, pretty much anything related to mining or hash rate or Bitcoin we're somewhat involved in. And that's who we are. It's kind of what we do. And thanks for having me on.
Yeah, I think Steven and I had talked about this. Steven's background on the more traditional Wall Street stuff has so many different, I guess, financial implications with each type of trade, each type of, industry or something like that. But mining for a lot of people has been, I have hardware, I need to put it somewhere. And that's really been their sole focus. But seeing you guys diversify into this whole sort of spectrum of minings, like the mining stack, I guess you would call it, it's a much more like technology savvy way of approaching it. Whereas I think a lot of people, they just look at what's the hash rate, it's going up. And then that's really all they can understand. But something we were talking about right before we got rolling was like hash rates worldwide, right? Hash rate is everywhere. The machines are getting better every couple of years, generationally. But now there's new innovations because people like yourselves are getting involved in the firmware side. But I mean, how do we see growth like in Bitcoin mining in the next couple of years? You guys are a mining company, you guys have a pool, but also so what's your sort of hand on the trigger viewpoint of what's happening in the next couple of years between now and the halving?
Yeah. So we are a software-based company, right? We write software-based solutions. We don't really touch hardware or infrastructure, meaning we don't produce our own machines. We don't build any buildings. That is not our, we leave that up to the Chad Everetts of the world who know how to put together amazing facilities, down there in Whinstone or in Rockdale, and all of our other partners that we try to work with, So when it comes to hosting, we try to find other people that know how to do hosting way better than we do. And so we go try to find hosts and that sort of thing. Now, when it comes to growth, right now, we're very much power constrained. There are machines that are sitting on racks that cannot get plugged in. And I think that's going to continue to be the case for quite a while. And the reason for that is because of the Chinese ban. We're still feeling the repercussions of that day, what would have been early summer of last year when they turned everything off. Those machines have found homes, I believe, but all the machines that were being produced during the time that those machines were getting relocated still haven't quite found homes yet. We're still seeing really high prices at hosting facilities. And that's just a lever due to the demand for hosting space right now. There's not a lot of room to plug them in. I'm absolutely flabbergasted by the innovation in mining technology and the way that people were able to get machines back online so quickly. I couldn't believe how quickly of a V recovery we saw on the hash rate. I owe a couple people steak dinners because I said we wouldn't get back over 150 exahash last year when we dropped below 90. When we dropped below 90 exahash last summer, I was like, there's no way we get to 150 this year. But we did. We absolutely exceeded it. And now we're basically banging off of all-time highs all the time. And I don't see that stopping. The only thing I think that's going to stop that is going to be international regulations. So I think we've got, we have some interesting news from Russia, them specifically targeting a Bitcoin mining host. And then also we'll see how a Texas summer, this will be like the first large scale Texas summer, how that deal, how all that new hash rate that's getting plugged in there, we'll see how that manages. So I do think that we're going to continue to grow. There may be a couple of hiccups along the way here in the short term, but long term, I think we're just going to be hitting all-time highs for for the foreseeable future.
Well, I think interesting is I grew up in Texas. CJ, you lived in Texas for a little while.
Mm-hmm.
I mean, Texas summers are a real deal. People melt. How do you guys think people are going to deal with keeping these rigs cool?
Yeah, so there is quite a bit of contention in the mining industry right now, whether you can effectively air cool Bitcoin mining machines in West Texas in July. Right now, I think folks are saying that you probably can't do it. You either have to cool them somehow with, most people are saying evaporative cooling if you use air. But right now, most of the innovation is going into immersion. The biggest and best facilities that are doing mining out in West Texas are doing it immersed. They're doing it at a massive scale, which we've never seen before. I think this will be there were some folks that were operating pretty high scale last summer, but this will be the first summer, I'm pretty certain, where we have facilities over 100 megawatts that are all immersed. So really interested to see how that goes.
Yeah.
Yeah. That's
for scale, 100 megawatts is so much power. That's like 1 megawatt is probably your entire neighborhood. And so 100 is huge.
Well, let's scale it up from a cost standpoint, right? Because I think that's the thing. A lot of Bitcoiners are always doing this calculus in their head to say, okay, 1 Bitcoin is, at the time of today's show, 42,000 or something like that. So I buy $42,000 worth of Bitcoin. I know what I'm getting. If I buy $42,000 worth of mining equipment, that's not even like a right size for a lot of people, because that gets you a couple S19s or What's Miners or something like that. But realistically, you have to be at a certain scale for anything to make sense with mining. And I know this from personal experience that whether you're using an upstream data solution or a digital shovel solution or whatever, you have to kind of rack these things, and there's a sort of right size to that. And then the miners, in terms of air cooling, it's sort of the strange thing. Like I'm in the car business, as you can see from all the paraphernalia behind me. And when you have the same problems with radiators and cooling systems with engines, you have a situation where if there's, let's say, part of something gets obstructed, then that airflow, it doesn't really work as well. There's like this harmonic effect to the intake, the fans blowing stuff out, then the fans themselves on the miners sucking in the colder air, pushing out the hotter air. And then if you don't have that sort of, I guess you would call it the aerodynamics or the sort of Bernoulli's principle, balancing out the right way, then you can get miners that systemically overheat because they're in one pocket of the digital shovel unit or whatever, and then it kind of cascades, and then you get this massive shutdown. So there's a lot of heat problems that people are trying to solve, and it's for the most part, the big huge miners that are, let's say, either on grid or running air cooled, they've been located in places like Alberta or South Dakota or Wyoming, or places that are sort of in the north where they're getting a lot lower summer temperatures, New York, stuff like that. So now it's interesting to see that, yes, because of the flexibility of the Texas grid, people like me are like, oh, hey, that's cool, I'll put 2 megawatts there or whatever. But that's a couple $1 million worth of machines, because there's 1 megawatt is like 300. It's like 300 S19s. Right, and each S19 is $10,000. So you have rough calculations. So it's crazy to think of how much financial scale Bitcoin mining has now. And I think that's really where the public markets have allowed Riot and Core and Hut 8 and these other and Marathon to really scale up so much, right? And that's maybe helping the whole industry scale up with hash rate.
So yeah, on the point to price, I think right now the barrier to entry is about a container. Like if you're going to go do your own deployment, you need to basically do one container, and those containers generally start at about 1 megawatt. A 1 megawatt container, depends on who you get it from. It's going to be between 300K and 600K. If you do immersed, it's going to be probably double that, but about $1 million, $1.5 million. And then you've got to do, like you said, once you that's just the container. You also have to buy machines. S19s are actually down a little bit, so they're about 8,500 now. So 2.5 million there. So you're looking at somewhere in the like $3 to $4 million total, total like startup cost to do 1 megawatt if you want to get off the ground, and that's a lot.
And that's right now that's 75 Bitcoin or something like that, right? So you have to kind of do this calculus to say, okay, over the next couple of years, am I better off buying 75 Bitcoin today if I have $3 million, or am I better off, like trying to earn, 90 Bitcoin or 200 Bitcoin or whatever else could happen. And I think a lot of people like the idea of Bitcoin mining as a kind of commercial real estate play, right? Where they're like, oh, it's like I have these little units and they're giving me rent every day, and they that's the traditional investor mindset. But Bitcoin mining is so much more complex than that, because it's like, when do you sell? When do you not sell? And I'm sure, and these different derivatives that you guys are doing. I mean, I'm on your website all the time looking. It's very interesting for me to see how this is all sort of starting to play out and mature in a big way.
Yeah, let's talk a little bit about, because we're talking about Texas, there's been a whole lot of speculation and some people utilizing gas flaring and redirecting that gas to power these miners. How has that changed the landscape in Texas? Or are people doing it more, or is it still in a very experimental stage?
So you're talking about what they call flare gas mitigation, and that's certainly one of the best, I would say, stories that the market is telling right now. Our friends over at Crusoe just raised a mega round, $500 million to go continue building this out in multiple different areas. And they're not the only ones. There are a bunch of other folks that are doing this. They're maybe the most well-known and probably the most funded. But there are a lot of people trying to do flare gas mitigation. You come to these sites and you say, oh, you're producing 1,000 MCF. We can turn that into, an extra $150,000 a month in total revenue for you, or something like that, for these oil companies. Makes a ton of sense for them. And it's also a great environmental story. Whether we like it as Bitcoiners or not, ESG is here to stay. And that narrative is, if you can lean into that in effective ways, you're going to make it way easier for yourself, going forward, to raise capital and tell the right story to the market. And I think that's something that, I think that's something that a lot of folks are starting to see. I think, Marathon just released earlier today that they want to be carbon neutral. Like, this is something that is going to be coming to our industry. And I think people that lean into it are going to be really effective at continuing to, be on the forefront of this industry.
I mean, look, I'm an environmentalist, so I'm all for us being efficient in our energy use and eliminating carbon as much as we can. However, some of the problem out there is, okay, well, what is, there's a big effort to say, well, we want to get to carbon neutral. We want to eliminate carbon. And the problem is a lot of these alternative energies utilize a lot of carbon fuels to even build the machines that you need to power them, right? Look at windmills, for instance. Everybody's like, well, wind power. It's like, well, have you ever seen a old windmill taken apart and taken to a landfill, right? What did it cost as far as energy usage to produce all the materials to build that windmill? And then it's sitting in a landfill and it's going to be there for millions of years because this thing's not it's not biodegrading. So that's actually one of the problems is, there's these assumptions on what is good and assumptions on what is bad. And what I want the industry to do is get to, well, what actually is good. And let's put these assumptions aside and decide that, let's go after the most environmental friendly thing, looking at all angles.
So I don't care about how do I say this? I care about the environment and I care about carbon emission, but right now I think what we need to be focusing on is sustainable energy. Now, sustainable,
Yes.
that term has been somewhat bastardized or taken over by like the green movement to mean like low carbon or green or efficient or whatever. But when I say sustainable, what I mean is lasting greater than 1,000 generations. So like basically the length of human history as of now. Whether we like it or not, fossil fuels will not last that long. They will run out. Nuke eventually will run out. It's quite a lot longer than fossil fuels, but they will eventually run out. So whether we like it or not, we have to figure out how to harness the power of the sun. So solar, wind, and hydro, which is from rain. If we can do that, that brings us to this new energy future where energy becomes effectively free. Really all you're doing is figuring out how to harness it more effectively. And the best part about Bitcoin is that it incentivizes that. It's the one that actually provides you the economic value to go learn how to do these things. So you're right, building the wind farms that have to eventually get torn down and thrown into a landfill, not economical. Bitcoin will make that more economical. And so I think that's one of the biggest values that Bitcoin mining brings to not just the ecosystem, but to the world as a whole.
Yeah, I think the big problem with everything, it gets back to scale again, right? Bitcoin allows you to microscale and it allows you to break things down to experiment with different technologies, whether that's harnessing methane, from farms, because, and this is something like I'm in an agricultural area. So I had a bug farm. Okay. So we had this farm that was taking the shells of the almonds and we were biodegrading that with bugs. And those bugs were then turning those shells into like a viable topsoil, supplement. And then those bugs were actually able to get fed to chicken farms or fish farms or whatever. And it was like a nice little cycle where you were producing something from the waste from the farms. Because farms produce waste as well. There's no such thing as zero waste, right? Everything that you do creates some sort of waste. Humans are very wasteful in a lot of ways because we like packaging. The difference between Bitcoin and a lot of other stuff is it requires no packaging at all. I mean, effectively, we've taken old janky ass shipping containers, like a torch and some cords, and we've turned them into these multi-million-dollar industries now at this point because we're able to break that down. Whereas you look at a nuclear plant is going to cost, I don't know, let's call it $3 or $4 billion to construct, right? I think the couple of us on this call, we would love to have that much money, and maybe if Bitcoin hits the digits we're thinking one day, we'll say, hey, it's cool. But that's a government level scale, right? Or a Musk level scale or a Bezos scale, right? So on the financial side of things, it's very hard to chip away at those products. You can't just chip away at a nuclear place. You can chip away with like methane because you can compost at your house, right? You can kind of grow your own avocados, your own tomatoes or something like that. So you can chip away at these things. And I think that's really where the relatability and the sort of bite-size aspect of Bitcoin helps, because it shows that you can make a direct link between innovation. Hey, I'm going to heat my house with my S9. Hey, I'm going to heat my pool with my S19. Hey, I'm going to heat my college's pool with 2 Wetsminers or whatever, right? This is doable. These are actual doable things. And they're sort of like, I would say, not playing for the tie, because you need this energy anyways to keep us comfortable, to keep us hot, to make beef jerky. You could use the heat to make beef jerky. Someone did that recently. So the innovation is bite-sized and the experimentation is bite-sized in the same sense that the Wright brothers that invented the airplane sort of did it on a shoestring budget, and they were like bike mechanics. They weren't like industrialists. It wasn't like Rockefeller or like a Richard Branson type of person that invented this. This was like, some guy, like some Geppetto dude that was making Pinocchio dolls and like, oh, you know what? I'll just make a balsa wood airplane. I mean, this is the innovation that has made America great over the last 100+ years. And I think we have that chance again, because with so much Bitcoin mining sort of like finding homes here, whether that's used units, old units, now you guys as a software company, you're able to innovate the firmware. So let's talk about that for a second, because the hardware sort of makes sense. It's a boom box or a shoe box. You've got one right behind you in size. And then that you plug that in and everything. I think people maybe understand that. But like the firmware itself, how malleable is the firmware on these machines? Because they have hundreds of chips inside of them, right? There's like a lot of things you have to assess.
So that is my heater there in the winter. I turn that on when it's hot or when it's cold, and turn it off when it's warm enough. But yeah, so I mean, that's an S9. That thing's not super profitable. I think if you ran it, you'd make maybe $1 a day with it. But yeah, to firmware, they are not very malleable at all, right? So they used to be. How do I say, they used to be a little bit more malleable. Like the S9, you could actually get firmware off and on pretty easily, but nowadays they're like pretty locked down. And so what that means is it requires like a very big effort to get to do the engineering required to get firmware off the machine and then back on. And then from there, you have to have the ability to actually write something that's useful. So not only do you need to be able to, like, there's a huge a cliff to getting firmware off and on the machine. And that's like the first big one. And then actually writing something interesting and useful is the next thing you have to be able to do. So there's like a large, there's like a large technical barrier to entry on firmware development for these machines. And so that's why I don't think we've seen a ton of innovation there. I mean, Brains is doing a great job. They're state of art by far on what they're trying to do there with energy management and chip management, energy management, all sorts of different features that they're adding in. I think they've actually added in the ability to do Stratum V2 as well. Those are really interesting additions that they've made to the product, to the firmware product. But I think there's still a lot left to go, and that's I think we're going to take a stab at it. So yeah, thanks for the question on that. I think firmware is really interesting. There's it's the conduit between the energy markets and Bitcoin itself. Like all the electrons that flow from all these power producers eventually go through some firmware somewhere. So the TAM is just significant there as well.
But I mean, obviously each device is different. And then there's lots of different mining happening, right? So you have people that are sort of running these 5+ year old S9s. Then you have the top of the line S19 XPs and the new stuff that's coming out that's basically hydro cooled from the factory, mm-hmm. right? That's designed for that. That's going to be running 200 terahashes plus or whatever. Mm-hmm. How many people does Luxor have working on the firmware versus working on maybe the financial aspects of?
So we focus almost exclusively on the financial aspect. Or I shouldn't say exclusively. We're very much more focused on our financial products. So we just hired a new. We just hired a new guy. He hasn't actually started yet, so I won't name him, but we do have a head of derivatives, which is joining Luxor, which is a really important, like a very important thing for Luxor. We need this person to come in and fully flesh these markets out. Excited for that. And then I think also, Luxor is a team of 44 now. So we're just under, we were 46 and we're 44. We have like some contractors that come and go, that sort of thing. But it depends on the day. We've hired somebody new every day. Actually just came off an interview when I was joining this call. But yeah, we're hiring people every day. That's a nice plug for, if you are looking to join a software engineering company that's working on Bitcoin and is a Bitcoin denominated company, please apply. We're happy to talk to you and talk to you about this sort of thing. But so we have 40-ish people working on everything. A lot of them mostly focused on software engineering. And then now we're spinning up, hash rate based derivatives and that sort of thing.
Well, if you know anybody, if you have any jobs where you have zero skills, but you pay in Bitcoin, I'm happy to apply.
Okay. I have that too. No.
Booth babe. Steven wants to be a booth babe next year.
I'll totally be a booth babe. Just tell me what to wear.
There you go.
I was just curious.
Hey, speaking of the financial product side of things, what I'm really interested in is how you guys are hedging hash rate. That's a bit of my background, but hash rate, that's interesting.
So yeah, there's different products that you can view or different ways that you can view hedging hash rate. So you can hedge your production, you can hedge the value of hash rate, you can hedge the value of the underlying. There are these levers exist in traditional markets already, like in oil. All of those hedging mechanisms exist. You can hedge your production, you can hedge the value of your production, you can hedge oil price itself. All of those things are very analogous to what we're trying to build here. One of the cleanest examples would be what I call a hash rate forward, which is effectively selling some hash rate that you're producing. So say I turn that machine on, or I have a petahash of hash rate that I turn on. I want to sell it for 6 months to lock in the value. we would offer a product that allows somebody to come in and take the other side of that. The reason they would do that is they view they can get that hash rate for some discount. They're viewing that that the value of hash rate is going to go up relative to the underlying, and that means that they would be able to generate some revenue or some outsized return on that investment. The reason the seller would be incentivized to do that is they can bring forward some revenue, right? Or they can lock in the value of that revenue. So
it's a swap, and what time periods are you looking at for these swaps?
So 6 months is about the longest you can get right now. Would love to extend that out, but it's really hard to get somebody to take the other side of a greater than 6 month swap because there are just so many variables. And the reason we think you need to trade hash rate is because there's just so many variables that go into this. Well, there's exactly 3, and they're very, very difficult to predict relative to each other. So Bitcoin price, transaction fee, and network difficulty, while they're somewhat correlated, they actually, they result in a much more volatility in the underlying, which is what we call the hash value, the hash price. So hash price volatility is actually quite high, especially during times of during difficulty adjustments and bull periods. The volatility of the hash price is quite significantly higher than the volatility of Bitcoin because of the underlying mechanisms, transaction fee and network difficulty playing into that.
So I know Josh had a question. Josh, you were going to ask something, I think, before Steven's question, right? What were you going to ask?
Yeah, sure. I was just going to ask about data integrity and like pulling all this stuff together. Like, what does your database for this look like? Is it just like a daily grind of going through and figuring out what's going on here with all this stuff?
Yeah. So for hash price, it's pretty easy. We're just pulling in all the different metrics we run Bitcoin nodes, and then we have exchange integrations to go get the dollar value. The one that's pretty difficult is the ASIC data. So we actually need to do some basic ML to do or natural language processing to go read. We're effectively reading Telegram messages and what WeChat and all sorts of different places to actually extract those things. So we have to do a little bit of actually some data engineering there to extract those values. And then we also need to be able to volume weight them. So if somebody sells one S9, the market rate for that thing's about $300 right now. But if somebody sells one of those for $2,000 on Amazon, that doesn't mean the value of an S9 is $2,000. It means the volume we have to weight as well. So there's a lot of little tweaks that we put into these these data points. And yeah, it actually is somewhat quite manual to make sure that the ASIC data is clean. But we do have a lot of little tricks that we can do to make sure it's to make sure it's as easy as possible.
So I want to bring up 2 more things. One is a question in relation to the hash thing. So if I'm a miner and I want to expand my business, I need cash in order to buy more stuff, right? So then I say, cool, instead of playing it out over the next 6 months, we'll use 6 months as a window. I'm going to rent my 10 petahashes out, right, for 6 months, and someone's going to pay me through that. And you guys run a marketplace, and then all the Bitcoin that my machines run during that time points to them instead of my wallet, and you guys have visibility on that, right?
Correct.
So then I turn around and I take that cash and I go buy more machines. So now theoretically I've got, let's say, 13 petahashes or something like that. And that's kind of
leverage,
the idea. Yeah. Okay.
Yep.
So I think
or you can just take that off the table. Or
right.
you can just take it off the table if you're risk averse.
Right. I think it's important for miners that have that sort of scale of maybe between 1 and 10 megawatts, because that's a really cool product where you have somebody who they're producing something of value, which is to say a lot of petahashes, but then they're in this sort of, they're trying to climb with the hash rate. And the only way to do that is either to borrow a bunch of money from, NYDIG or, Anchorage or BlockFi, which I know you guys work with, or you have to, because you don't want to have to sell your Bitcoin all the time, right? So it's because your miners have value. So you're like, oh, well, if in 6 months from now I have 13 petahashes, what difference does it make how I do it? But you might have that 13 petahashes online in 90 days instead of 180 days if you're able to sell that option the right way, correct? So that's my mind. I'm sort of spinning thinking about this because I've been thinking about financing to expand, but I'm like, well, if I just sort of give away hash rate for 6 months, then someone pays me today, I can go buy stuff. It shows up in 15 days. And then all of a sudden I've got extra hash rate that now once that contract expires. Now I have a ton more,
Yep, exactly. So at the very ground level, that's exactly what we want to build. Is that product? There's a couple intricacies there. They have to be collateral. They would have to be collateralized, which is a kind of a bummer. Makes it tough because there's nothing to stop you as the seller from taking that revenue and then just turning off your machines and then going to another pool or doing something else. And so you'd have to do some collateralization, but a really interesting new product that comes from that is the ability to underwrite. You could have somebody come in and underwrite your collateral and take that risk over. And then you would then be able to unlock your collateral, go reinvest it, do exactly what you said. And so that way you would be able to go continually reinvest your forward hash rate. And really, what you're doing is you're just levering up, which is awesome. Like we don't have any way to lever up or down. So,
and then I guess the last question I have is, as we've been talking about Texas a lot and America a lot, but I think, seeing with what El Salvador is doing with the volcano mining, I think a lot of people are fascinated by that. And that is, I think, opens up a lot of other international markets. When you talk to other people at other mining companies and, your clients and stuff like that, how many people are seeking like real deep alternative energy sources versus traditional on-grid or let's say nat gas, which I think is very mainstream at this point. In the last 12 months, nat gas mining has been very mainstream. But I think like, how far are we from maybe geothermal mining being mainstream in your eyes?
I would say pretty far. It's really expensive. That's the problem. It's just really expensive. So you're really just trying to find like the cheapest energy for mining. And right now, geothermal is just not it, unless it's subsidized by the El Salvadorian government. But otherwise, it just doesn't make sense. You would want to go. Somewhere where you can get flare gas, cheap solar, cheap wind, et cetera.
But we want it to work so bad.
We do.
Laser eyes and volcano steam. Volcano steam mining is so baller. That's just like, it's just such a cool deal. Pretty
gangster. I would love to make it work, but yeah, all those things. There's okay. So a couple of alternatives are like people doing bio waste. There's somebody was burning tires in South Carolina, which sounds terrible, but they're actually taking all of the carbon from that and turning it into some other thing that you can reuse. And then all the steel that comes out, you can recycle that. Folks burning trash, folks burning all sorts of stuff.
Yeah, I think recycling the products that we have in a productive manner as a society is a much better way of focusing on any kind of environmental concerns, because landfills really do throw off a lot of methane. There are the people that have kind of started to work with the worms and the sort of bacteria that biodegrades plastic. But I think until then, which I think has like a pretty big ammonia component to it, and that's also a very noxious problem to have. We need to focus on the most efficient use of full cycle energy, right? And I think, and so when we're producing something, whether it's a windmill, which is maybe not all it's cracked up to be, to a pellet smoker, like a Traeger that we're going to be barbecuing our brisket on this weekend or something like that. There's this element of, I think, Bitcoin mining that makes people so creative because there's money dangling right in front of you. And I think that's the thing that, it's great to say from a first principles standpoint, I want the water to be cleaner. I want the air to be cleaner and all that stuff. But doing that at scale is very hard. And unless you're doing the simple stuff like that kid that invented the trawler that picks up all the trash in the rivers. There's a great TED talk about that. To me, that is like, we should be focusing on that and cleaning with a water supply more than any of this ESG stuff in related to Bitcoin mining. But that's a whole nother political can of worms. I just think it's so cool because I think Bitcoin miners are all innovators. I think they're always looking for that extra little bit. They're just trying to tweak and prod and stuff like that. And that's kind of what you guys are doing now, because you're taking this full stack of Bitcoin data and you're turning that into a financial possibility that people can, hedge themselves. They can hedge their production. They can hedge Bitcoin's price. They can guess, they can gamble, they can do all that stuff. And I think, we have that for everything else, right? We have that for soy. We have that for corn. We have that for oil. Why is there not a more robust Bitcoin, hash market? I think that's a great thing.
Yeah, I agree with you. Why? Well, it's hard, and we're trying to tackle hard problems over here. So,
Steven, any last questions? Anything else you got? Or
No, I really appreciate you coming on. I mean, you guys are really tackling a lot of different areas, and absolutely wealth of knowledge. I'm glad that you're working on hash rate derivatives. I'm glad that you're working on sustainable energy. I'm glad you're working on these financial products that I think is really going to grow the Bitcoin ecosystem.
I appreciate it. Yeah, these are the things that we think about, all day, every day. And if you would like to think about them too, happy to talk about it. You can DM us on Twitter or email us or whatever, and we'll chat about it. Want to talk to you. Also, if you want to work on these problems, happy to have you join, and we can talk about them then too.
I wish I would have studied software as a kid. I feel like this is like such this creative process behind it that people don't see, and they just see the finished product, but they don't know how hard it is to actually, iterate through these different versions. Josh is like grinning over here because he's like, yes, I can do Python.
I was gonna say, there's still time, CJ. You're young.
Yeah.
You're young.
I'm
CJ,
41,
I did study
41,
software,
bro.
and it was so hard. I switched to do something entirely different.
Right. Yeah, that's where I'm at right now. I'm just like, I want Bitcoin, and I want to help Bitcoin. I want to do what I can, and my version of that now is getting as much as I can through mining, because I believe that that's like the best industry to be in right now. And I think that everybody that's in the mining industry is, even if it's like super competitive. It's the definition of competition. But I meet so many gentlemen and like scholarly, nice people in the mining space. It's very funny because you have to be honest in a lot of ways, because your production is right there and everybody can see it. Like if someone's on mempool.space and they're like, oh, their Luxor won a block, or Foundry won a block, or whatever, I think it's cool, it's interesting, and we just have to do everything we can to protect Bitcoin mining. That's the thing that keeps resonating in me. So that's what we're doing. That's what we're here for. All right. Well, I think that about wraps it up on the Bitcoin Bottom Line. This has been a great episode. Nick from Luxor has been a great guest, educated us on a multitude of financial possibilities and sort of, what's happening behind the scenes of Bitcoin mining. And, we'll catch you on the internet. We'll see you on Twitter, and try not to be too toxic.
All right. Thank you guys. Take care.